Yes, what's up guys? Welcome to another video. So in this video, I want to explain a setup I recently took. In fact, I'm still in the trade. It's a clear Wyckoff accumulation play, and I want to go over why I entered this trade and basically how you can apply Wyckoff for yourselves. So we start at the weekly time frame. Now I only trade the daily and the hourly, but on the weekly time frame, something interesting has happened. As you can see, we came all the way down to this swing low on the weekly. And what's interesting is we break it, close above, break it, close above, break it, close above. So that's 3 weeks in a row that we break it and we close above. So I identify this as a liquidity grab, a false breakout, whatever you want to call it, but this gives me a bullish bias. Let's go to the daily time frame right now, because that's where the magic happens. So if we look at the daily time frame, we see a clear range forming. And if I draw a line over here, this is the range low. And if we zoom into the daily time frame right now, you can clearly see accumulation happening. This is your selling climax. These are all tests in phase B, and then a clear and very obvious spring over here. Now, I was already long at this particular area for the same reason, because we broke this weekly swing low, closed above, and I saw an accumulation range at the time, which was this range, selling climax, clear spring. I entered at the break and close above, and I was targeting this area. Now we didn't get there, and I took a loss on this, but I don't close the chart because this is what I trade. This is the chart. This is the pair I trade. Now, then I saw this happening, and this was very interesting to me because this was a very violent move after a violent move down. So this was a clear selling climax to me. And also the location, we're still at that swing point. We're still breaking the swing point on the weekly and closing above. So I'm still bullish and looking for the bullish trade. So afterwards, price moved down, formed a low, moved back up, formed another low at the same level. So you can expect liquidity to be below here. And also here we got another test. So we have, if we zoom in, we have 4 tests. Let me fix that. We have 4 tests, 1, 2, 3, 4 of that same level. Now, the more often the level gets touched but doesn't get broken, the more liquidity is below this level. And then you can see on this day we had this spring, and then price significantly moved up. So it broke these 4 lows, and it also broke the selling climax, the low of the range, and we are still below that weekly swing low. Now, afterwards, price moved up, then went back to retest the origin of the move, and then broke above this massive level. At that point, I'm very bullish. And I basically entered on my trading account. This is my analysis account. I entered on my trading account long after this break above. I expected a retracement towards here, simply because this is where demand came in. My stop loss is currently below here, and I'm targeting the, let me go to the daily time frame, makes it a bit clearer. I'm basically targeting this swing high. And why? Because there's liquidity. Now, you might wonder, why don't I target this area? Because this area has multiple touches, and I'm expecting a breakout to the upside, breakout play targeting this. Now you could target this because this is where supply came in this area. This is the way I trade. This is a clear accumulation range to me. This is your PS, your SC, move to the upside, then the STB forming, generating liquidity below the range, another move up, clear spring. Look at the daily hammer, very, very bullish. Then I waited for a clean break above this area on the hourly, close above, entered long, put my stop around here on the hourly time frame, targeting the blue line. If we get a clean break above this area and a retest, I might look to move my stop up and pyramid into this trade. That's something I've been working on recently by listening to podcasts and interviews with great traders. Usually they tell you one thing, and that is be bigger in your winning trades. And that's something I'm working on, because nowadays, well, for the past year and a half, the way I've been trading is I enter at a breakout after an accumulation, and I have a target. I don't manage my trades at all. And that's how I made my money the past year. But I always look to improve, and that's something you should always do as a trader. And I want to see if I can get more money out of my winning trades. So the way I do that is I wait for clean breaks of structure. So my entry is around this level. My stop loss is around this level. So it's a bit over 1-to-1. And what I look for if I want to pyramid is something like this. So break above, bit of stability forming, then a break to the downside. And if you get a close above here, then I'm pyramiding, basically moving my stop towards here, and the freed up risk I will add to my position over here, targeting this level. That's something I'm doing, and it's kind of new to me because I'm a fully mechanical trader. So I have black and white rules, and this is more discretionary, the pyramiding stuff. So I'm working on it. I'm still figuring out how exactly I want to apply it, but this is the general concept I want to use when I'm pyramiding. So I always enter after a spring break of structure. This is my entry level. I do have the statistics. I'm not going over it right now because this is an accumulation session, but I do have the statistics in my favor on this setup, which is around 67% chance of targeting this upper line over here for taking my stop that's over here. So the odds are in my favor, clear accumulation range. But then I want to make more money on my winners, and that will be done via pyramiding, which is basically a reaccumulation range. I only trade accumulation, reaccumulations, etc. And yeah, that's my approach to this setup. I haven't seen any great setups in quite a while. This is the best one I've seen in like a month. Last month in FX, I was down a bit of money. I made it up in crypto. In fact, I made a decent profit in crypto. And hopefully this month will be a great month again, with some more setups, because I had like 4 trades last month, which is really low. So I'm also working on increasing the frequency of my trading, but this is the basis. This will always be the basis. Clear accumulation ranges, and the best accumulation ranges happen at these areas on the weekly time frame, and the best ones also have an STB where the selling climax doesn't get broken. And why? Because let's say this is your selling climax, and you get an STB that breaks the selling climax. That means the liquidity that was below the selling climax over here, so the stop orders, the buy stops, and the selling will already have been triggered. So it won't be triggered by the spring, but it will already be triggered in phase B. And that's something I don't really like. I want to see something like this, a range forming, then a higher low, people thinking the uptrend is starting because, hey, it's a higher low. And then these people get fucked, basically liquidity below here and here getting grabbed, and then a move to the upside. This is my favorite play. This is the highest probability setup I trade. And if you're trading Wyckoff, these are the ones you want to look for. And this is exactly what's happening in the USD Canadian. That's why I really like the setup. And that's also why I really liked the one before, because as you can see, this would be the SC, this is the STB, and look at that. it's at the same level. So the liquidity below this area hasn't been triggered yet. It gets triggered when the spring happens. And that's what I want to see, because all the people that bought here are getting fucked. And if you get something like this, then not enough people get fucked, in my opinion, if that makes any sense. So that's my approach to Wyckoff trading, and that's how I use it. And also want to clarify something, because nowadays I see a lot of people that promote the Wyckoff method, and they are talking about hitting 200 R trades with the Wyckoff method. Now, to me, that's not what the Wyckoff method is all about. The way I learned it is establishing ranges, and then after the spring, you enter either at the breakout spot or after a spring. But nowadays, you see people, when there's a 1 hour accumulation range, you see them zooming into the 1 minute time frame, getting a 2 pip stop loss and targeting 100 R, which is not the way this method was intended, at least in my opinion. So if you're going to trade the method, be realistic, aim for reasonable targets, and enter at spots where you are comfortable. So don't follow these guys and think you can trade this way, because it's very stressful to trade with big targets. I always trade after the breakout. That's also the reason why I traded here. And people always ask me, why don't you trade after the spring? So let's say the spring is confirmed over here. They say, why don't you enter there? And that's because the win rate is so much lower if I do this. The win rate, my win rate right now is around 65 to 70%. But if I would enter here, my win rate goes down to 40%. Now, of course, the returns will be greater, but I prefer a higher win rate. And that's something you need to figure out for yourself. Do you prefer a higher win rate? Can you take losses well? If not, wait for the breakout and enter over here at a clear close above the range. That's the safest spot to enter. That's where you have confirmation. Okay, liquidity, well, that's a fucked up line. Liquidity below the lows has been taken. We got to move to the upside. This is the level of structure. We got a clean break above structure. Breakout confirmed. Accumulation is confirmed. Now I want to join the market. This is where you have the highest probability of success. If I enter down here, I'm not ready. I'm not sure if this is accumulation, because if we get a liquidity grab up here and a move down, we might as well take out the low for another liquidity grab. So that's something you need to think about. Do you want a higher win rate? Then you enter at the breakout or a retest of the breakout. And if you really want those better entries and better R, then you enter after the spring. So that's my take on this. This is the trade I'm taking. This is how you can apply Wyckoff in your own trading. If you have any questions, please leave a comment down below. I would love to help out, and also leave a like and subscribe. That would really help me a lot. So hope you guys learned a lot, and speak to you guys in the next video.